Alright, what's going on everybody? Today is April 8th, 2023, and in this video we're going to look at the silver bullet model and learn how to trade them. So the silver bullet was a concept introduced last month during one of ICT's Twitter spaces, and he stated that in between 10 and 11 a.m. there was a 5-handle run opportunity which happened almost every day, and this entry is now known as the silver bullet. Okay, so the question is, how do we trade this model? So I'm going to go over 4 things that will hopefully lead you in the right direction into learning how to trade this effectively. So the first thing will be the 10 a.m. displacement. The second thing will be the fair value gap retracement interest. The third thing will be the take profit. And the fourth will be some tips and tricks of how to trade this effectively. Okay, first thing is the 10 a.m. displacement. So there's 2 things that you want to look for. The one is untapped liquidity. So something that's obvious that hasn't been touched yet. And then 2 is displacement towards that liquidity. Okay, for example, if before 10 a.m. we took out buy side, the untapped liquidity in this situation would be the sell side. So we want to seek shorts for the silver bullet model. And in reverse, if we have sell side being taken before the 10 a.m. and here, then we would want to see buy side as our untapped liquidity pool. So in the first situation, if buy side has been taken, we want to see after 10 a.m., we want to see displacement towards the sell side liquidity pool, which is our target. So this is what you want to see. You want to see large displacement towards that sell side liquidity pool, and that should be your first step check. Number 2, fair value gap retracement interest. So there's 3 things I want to see. So after the 10 a.m. displacement towards the untapped liquidity pool, you want to see a fair value gap form sometime in between a 5-minute to a 1-minute time frame. 2 is you want to see retracement into that fair value gap. And then 3 is you want to see a second fair value gap form sometime after that displacement from the fair value gap, and that can be your entry model. Okay, for an example, we have buy side taken, and now we're seeking sell side. So we have buy side taken, and we have our 10 a.m. displacement leg that goes lower, which is good. And then we should see in between this high and this low, this most recent price swing, we should see a fair value gap form that we can use as confirmation. So then what you want to see after it is you want to see a retracement into that fair value gap, leave the fair value gap, and then sometime in between here or here, there should be another fair value gap, and that will be our entry model. So if we have this, then we should see a retracement into that. It could just be by a wick or by like 1 tick, and then that will be our entry short in this case to go lower. Okay, so here's the long setup. We have sell side taken, we're seeking buy side. We have our 10 a.m. displacement leg towards the buy side, which is good. And then now we should see in this most recent price swing a fair value gap form somewhere in between that. And we also want to see a retracement into this fair value gap. So after we retrace into that fair value gap, we should leave it, and sometime in between that second leg, there should be a secondary fair value gap that would form. Make it blue. And we want to see a retracement into there, and that can be our long entry into the buy side. Okay, the third thing we're going to look at is the take profit zones. So obviously for any ICT concept, you want to use at least 5 handles for your take profit, and then 2 would be any untapped liquidity as our final terminus. So in this situation, we have a long where we're long off of this second buy side imbalance, sell side inefficiency, this fair value gap. So our target is going to be somewhere, it should be 5 handles. So we're going to take off at least some on the 5-handle mark, and then the runners can be left towards the untapped liquidity. And that should be for every single situation. So if you flip it, so here's the short model, where you have the first fair value gap, second fair value gap as our entry point. So this is where you go short. So from this high of where you shorted, you should net at least 5 handles, wherever that 5-handle mark is. That's where you'll take some profit off. And then the rest of the contracts you can let go all the way to your untapped liquidity pool. Okay, number 4 is the tips and tricks. So according to my own back testing that I've done, the 10:30 to 10:45 mark typically gives a good entry point that is in line with the silver bullet, and you can do your own back testing on that. And the second thing is you need to be aware of the 1050 to 1110 macro that's run, and that can sometimes scare you out of positions if you don't know what you're looking for. since it'll typically retrace into a fair value gap or to a untapped liquidity pool that you were not expecting beforehand. So in this case, this model could enter at your 10:30 to 10:45 mark. And I'll show you examples of these in the backtesting that I've done. But if you do your own backtesting, you'll see that this occurs a lot of the times between this 10:30 to 10:45 mark. And if your untapped liquidity has not been reached by 10:50, I would be careful of the 10:50 to 11:10 possible reversing in the other direction. Okay, now we're going to jump into the model examples. So most of these pictures will be short setups, and there's going to be one long setup. So I encourage you to do your own backtesting to find where these setups form and to train your eye to see them form with live data instead of just backtesting pictures. Okay, the first example comes from Infinity Trading. You can find him on Twitter. I'll put his link in the description below. It'll be the first link. Please go check him out. He does some great work over there on that space. And this is just a perfect example of what to look for. So you can see after 10 a.m. we have that displacement lower. And then after that displacement, you're going to be looking for your fair value gap to form. So this 1 minute fair value gap, we tap into it and we displace away. And in that displacement leg, we do form this secondary fair value gap, which is this green. And we re-tap into that, and that's our short model. So we're going to be targeting our 5-handle run, which he has perfectly outlined. And we do actually get that, but we don't reach our sell side, which was our external terminus. Okay, second example, we do have displacement lower. And in that displacement leg, we do go up and fill this sibi, this sell side imbalance, buy side inefficiency, and displace away. You can use that as our entry model, but the silver bullet is our second entry of the fair value gap. So we do tap this secondary sibi. That will be our short entry, this wick of the down candle. And you can see it does displace 5.25 handles and continues down further, including the 10:50 to 11:10 macro. Okay, another short setup. We have 10 a.m. displacement with, I think this is news right here. We have displacement lower. And not on this picture, we have a 5-minute fair value gap that's formed in this price leg from high to low in the displacement leg. We return into it. So now we're going to be looking for a secondary fair value gap. So we go away from it. And in that displacement leg, secondary sibi is formed. We can take our short there, stop above this high. And you can see it nets way more than 5 points. I think it nets around 12 all the way into this 1 hour fair value gap, which is in blue here. Okay, here's our long setup. 10 a.m. comes, we have displacement upwards towards this buy side liquidity over here. We have our first fair value gap, fills, leaves it, secondary fair value gap, that's where our long entry will be. And you can see if we longed here with a stop loss below here, we reach about 5-6 handles up to the high. Okay, we have a short setup here. Off screen, we have displacement lower after 10 a.m. And we have our first fair value gap technically here. It fills it, leaves it, then secondary fair value gap, we can short there, stop above the high. And as you can see, if we entered at 39.54, we need 39.49. And that gives us plenty of handles, at least 10 handles from this high to the low. 10 a.m. comes, we have displacement lower, 1 minute fair value gap right here, we do fill it, and then on the way down, we have another fair value gap right here, as well as right here. Here's our short entry, and you can see it displaces well beyond 5 handles, and then the 10:50 to 11:10 macro actually reverses price. Here we are again, 10 o'clock, we have some chop, and then eventually we do displace over here at 10:13 roughly. Fill the first fair value gap right here. It's not outlined, but kind of imagine, draw it out. Fill it, leave. We actually do fill a fair value gap right here. That can be our short entry, but if you want a little bit more of an obvious fill, here you are right here. And then we target at least 5 handles, which would send us down to 44,010 roughly, which is the middle of this new week opening gap, which is highlighted in green. Okay, that'll wrap it up for this video. If you have any questions, please leave them in the comments. I'll do my best to respond to all of them and try and reach out to you. Otherwise, DM me on Discord. The link is in the description to the public Discord. It's open to everyone, and there's also a Patreon if you want more access to some benefits. Daily reviews will continue on Monday, and you can catch them for the rest of the week. I hope this video was educational in some manner, and if it was, please leave a like. It helps out a lot. And in the meantime, stay safe, and I'll catch you guys all later.